The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, good evening, traders. Welcome to another free webinar by Elliott Wave Forecast.com. My name is Daud, and today we will be presenting a webinar about the future path of the world indices. And today is September the 22nd, 2023. And the time right now is 12:37 p.m. Eastern Time. Apologies for the few minutes delay in starting the session. So I see a lot of people have joined, so I would like to welcome all of you to this free webinar, and I hope you guys will enjoy it. And I see a lot of non-members as well, so please feel free to ask any questions that you guys might have. And of course, we can, give it a few minutes towards the end as well for the questions and answers session in case you couldn't think of the questions while we were doing the webinar. Good day, David. Good to see a lot of familiar faces here and a lot of new clients as well. So good morning, good afternoon, good evening to all of you. Let's give it a couple more minutes and we'll get started to give a chance to everybody to join because I see a lot of people have registered. But since we are like a global business and the markets they operate like in most countries, like kind of like round the clock. So it could be like night time somewhere, so some people might not be able to attend, and they can watch the recording then later on. All right. So we'll start at 40 past. So let's give it 2 more minutes, and then we will start the session. So I hope all of you are doing good and are looking forward to the weekend. And I think this webinar is also going to be very interesting. Of course, the members, they should already know about what our view is about the future path of the world indices, but we want to present like an overall idea here because there are a lot of people joining us and a lot of non-members as well. So just to let them know what our view about the world indices future path is, because the indices have been like pulling back since forming highs back in August. Some have made new highs afterwards, but every time there is a slightly bigger pullback, everybody starts talking about a major peak and a major crash in the indices. So we today want to take this opportunity to present our view of the world indices and how we are looking at the markets and what we think should be happening next. And we will present our reasonings as well. And then it's up to the market to decide whether that's going to play out or not. But we will, as always, provide our logical forecast and explain why we think that a particular direction should be followed by the market. All right, everybody. So let's start the webinar. All right, as you can see, the title is The Future Path of the World Indices, pretty self-explanatory, and it's presented by myself. My name is Daud Bhatti, and we will move on to the next slide. All right, and in this webinar, we will look at the future path of the world indices. We will do this using various stocks and indices and explain the most likely path for the world indices going forward. Now, as always, you can have favorable path, but remember with the markets, nothing moves in a straight line, right? But what we will be covering in today's webinar is the overall direction, the long-term view, and we will present some detours as well, which might take place along the way. But again, we believe that they could just delay the inevitable for a short period of time or for some period of time. But eventually, we believe that according to our analysis, the conclusion that we will draw at the end of the session, that's what we believe is the most high probability path for the indices. Of course, like I said, nothing moves in a straight line, and there can be some detours along the way, but they would be in like the short to the midterm cycles. But what we will be covering mainly is talking about the long-term direction, and that's why if you see here, point number 5, it says two possible paths in CAT, which is a caterpillar stock, but with the same end result, right? So, for example, whatever the direction we believe the market is going to follow, we do believe that's what's going to happen at the end of the day because of the valid reason that we will be providing during the webinar. But again, any detours, they could just delay that move by a certain period of time. But we do not think that, anything like there are any red flags for the view that we would be presenting today, and we will be discussing that later on during the webinar. All right. So we will be covering the following topics during the course of the webinar. Just to give you guys a heads up, because like we will start by taking a look at the various Elliott wave cycle degrees. Right, we'll take a look at some Elliott wave structures, including impulse structures, upward impulse, downward impulse, extensions within an impulse wave, and so on. Uh, right, because we use these sequences to basically try and determine the right side and then arrive at our forecast. So it's an important part of our system. It's not the only thing we use. It's one of the things that we look at, right? Then we'll be looking at the grand super cycle sequence and the indices. We'll be looking at the weekly highs that some stocks and indices are showing right now. We will talk about okay, and we will also talk about the two possible paths in the Caterpillar stock with the same end result. And then we will talk about the indices path related to the US dollar index. And in the end, we are going to draw a conclusion about, the future path or the most likely path of the world indices. Hello, Hector. I'm doing good. I'm glad to see you here. Uh, okay, I'm not sure what you mean by that comment because if you are a part of the service, so I have been doing the group 2 live sessions for a very long time, for as far back as I can remember. And I think when we started the group 2 in EWF, and we started having a live session for it. In the beginning, probably we didn't have it for some time, but ever since we've been doing the group 2 live session, I've been, handling that. And yes, we do record all our live sessions and the daily technical videos. Of course, it's a video, it would be recorded, but all our live sessions and live trading rooms, they're recorded for later viewing at the website because we do understand that markets move around the clock and everybody like they can have like a day job, they can have another job as well, so not everyone is trading full time, so they not everyone is able to attend all the sessions, so we do record all the sessions, and this webinar is also recorded for, so if some of you are not able to sit through it till the end, so you guys can always catch up on the recording as well. So this will be recorded as well and put up at our website latest by Monday, or probably even sooner than that. All right, guys. So thank you for that, Hector, and thank you for saying hello. Right. Now let's move on to the next slide. Okay, so the various cycle degrees are mentioned here, right? Starting from sub-minute to minute to the minute degree, minor, intermediate, primary, cycle, supercycle, and grand supercycle. Right. So uh, basically, a degree signifies like how long in time a wave could basically take to complete. But I would say that this is more like a reference point, right? Because sometimes the cycles they move so quickly that if you just went according to the time, then let's say you label it as a minor wave one on a weekly chart, then you will have very few labels left to label on the lower time frames. So very few degrees left to tackle and hand label that same move on the lower time frames. So that's the reason why we do not pay too much attention to the time part. Of course, they do have significance, but what I mean with that is that obviously as you keep getting more data, you can always go back and change the degree. So let's say if you see a weekly chart labeling a grand super cycle wave one, it doesn't mean that it lasted like multi decades, right? It could have been just the stock could have been just around for a few years as well, but obviously when we do that, we get more degrees to label and more details to show in the lower time frame charts. Otherwise, sometimes you get very empty looking charts in the lower time frames, right? So these are the various degrees. So you have in total 1, 2, 3, 4, 5, 6, 7, 8, 9 Elliott wave cycle degrees, right? Starting from subminute to the grand super cycle. And of course, like I said, they can just let you know what like cycle you are in within the larger Elliott wave cycle, or what degree you are in, right? So moving on to the next slide, like I said, we'll be looking at a couple of different Elliott wave structures because remember, when you are later on when we look at some charts, so you will be seeing these structures and you will be explaining like a particular stock in an incomplete impulse or completing an impulse or it's nesting. So I just want to go over these concepts before we get to those charts. So of course some of you would be at a very good level and would have a very good understanding of Elliott wave structures and Elliott wave in general, right? But some of you might be new to this topic, so I don't want to be unfair to those who are not well versed with the Elliott wave terminologies and they still want to know our view about the future path of the world indices. So I just don't want to keep them in the dark, and then they might be wondering when we get to the charts, then they might be wondering, okay, what is an impulse? What is this guy talking about? Wave 3, wave 4, wave 5. Of course, I cannot cover all the basics here, but I just wanna present some structures here at least, so you guys get some idea, even if you know a little bit about Elliott wave. So this could be like a refresher for you guys. For those, of course, some of you, like I said, would be quite well versed and would be very knowledgeable when it comes to Elliott wave structures and other stuff related to Elliott wave, right? But not everyone is at the same level, so it's important that we go through this so you guys, everyone sort of gets an idea about the structure that we will be looking at later on when we move to the charts, right? So the impulse structure, it's a five waves pattern. It could happen in a bullish market or a bearish market, right? So this is an upward impulse price action. You can see it consists of five waves, right? Wave one, wave two, wave one. In this case, it's an upward impulse. So your wave one, three, and five are going to be to the upside, right? Because in an impulse, always your wave one, three, and five, they advance in the direction of the impulse, and wave two and four, they go against the direction of the wave, the direction in which the wave is traveling, right? So in this case, the wave is traveling upwards. So your wave one, wave three, and wave five, it would be to the upside. And wave two and wave four, of course, will be to the downside. It is because it is a correction of the previous impulse wave, and that's the reason why, of course, they're to the downside, and that's how an impulse wave is formed. It is a five-wave structure. Of course, within this wave one, wave three, and wave five, you will have a smaller degree impulses, right? But this is like a general, look of what an impulse looks like, right? So it's a five-wave move. It's an upward impulse price action. It could be to the downside as well, right? So, for example, this is to the upside. You can have it traveling to the downside as well, and that will also be in five waves, of course. But the only difference will be that in the downward impulse, your wave one, wave three, and wave five will be to the downside, and wave two and four will be to the upside. So that's the main difference for those who are new to this, right? So it's a five waves pattern in a bullish market. Okay, after a five wave impulse, there is always a three waves pullback. So when you see this wave two and four, these are corrective structures, right? So in an impulse, your wave one, three, and five will also be an impulse. Like one and five could be diagonals as well, but wave three always needs to be an impulse if it's an overall impulse, right? And wave 2 and 4 will be corrective structures. So whenever you finish an impulse, then you get a larger three-wave pullback like you got here in the form of wave 2 and wave 4. Right, now moving on to the next slide, now you can see the downward impulse structure. So this is a five waves pattern in a bearish market. Previously, we looked at the five waves pattern in a bullish market. Now, this one, like I mentioned previously on the previous slide, that an impulse structure could be in either direction. It could be to the upside or it could be to the downside. The one to the upside is called a bullish impulse, and then this is a bearish one, right? So, five waves pattern in a bearish market, it's a downward impulse price action, exactly the same as the one we saw in the bullish market. Only difference, as I mentioned earlier, that your wave 1, wave 3, and wave 5 in this case are traveling to the downside, and wave 2 and wave 4 they are traveling against the direction of the wave 1, 3, and 5, which is the direction of the impulse in this case, right? So basically, just to recap, this is your, let me see how I can go back. Okay, so Yeah, so this is the bullish impulse, right? You can see wave 1, 3, and 5 going to the upside. And then this is your bearish impulse, wave 1, 3, and 5 traveling to the downside. Now, this these are again all impulse waves, what you see on this graphic. All right, these are impulse waves with extensions. So you can have like numerous extensions. Usually it's the wave 3 which extends, right? And you can have many extensions within wave 3. So it is important to understand that an impulsive sequence, it will run in 5, 9, 13, 17, 21, 25 swings and so on. So basically you start with 5 and you keep adding 4 to get the next number in the sequence. So if like if when we started here with 5, if we go here, this is 1, 2, 3, 4, 5, right? So let's say one of the waves was extended, then this will be in 5 as well. Then this will become 1, 2, 3, 4, 5, 6, 7, 8, and 9. So you add 4 and you get 9. So basically, uh, this is showing you the extensions in an impulse in a bull market, like an upward trending impulse, and these are the bear market extensions, like a downward trending impulse. So here in this case we can see a first wave extension, like wave 1 is here, and we can see a subdivision of 5 waves within wave 1, 1, 2, 3, 4, and 5. And then you got this 6, 7, 8, and 9, right? Still got 9 swings, which is part of the impulsive sequence, but in this case your extended wave is wave 1. That's why you can see here it is mentioning it as the first wave extension. Similarly, this is the bear market. You can just flip this one, upside down, and then you get the bear market impulse with first wave extension. 1, 2, 3, 4, 5, 6, 7, 8, and 9. Right? Your wave one is subdivided in 5 waves, but then you didn't get any extensions in this case in your wave 3 and 5. Right? Now this is the third wave extension. So overall it's the same, still got 9 swings here. 1, 2, 3, 4, 5, 6, 7, 8, 9, and you got 9 here as well. 1, 2, 3, 4, 5, 6, 7, 8, 9. Now what is the difference between this structure, the one at the top, and the second one, is that if you look at the subdivisions are shown here in the first wave. That is why it's called the first wave extension. And in the second graphic here, the second image in the same graphic, right, on the left hand side, you can see that the subdivisions are shown between 2 and 3, right? So this is 1, 2, then you got 5 waves within the wave 3. That's why it's called the third wave extension, right? Similarly, this is the fifth wave extension, right? For example, the subdivisions here are within wave 5. So you got 1, 2, 3, 4, and then you have 1, 2, 3, 4, and 5 within wave 5. So in total, it becomes still the same total swing count as we saw in the above two examples. This is 1, 2, 3, 4, 5, 6, 7, 8, and 9. And then on the right hand side, obviously you can just flip these upside down and you get the bear market, fifth wave extension here, third wave here, first wave here. Now these are the identified extensions, that you can easily identify, right? Because you can see a clear extension either in wave 1, in wave 3, or wave 5, right? That's why they're called first wave extension, third wave extension, or fifth wave extension. Now, in the last one here, this is still 9 swings: 1, 2, 3, 4, 5, 6, 7, 8, and 9, right? But you can see that in this example, none of the waves is having a clear subdivided extensions, right? Neither you could say that your wave 1 is extended, right? Because there is no clear wave, like a big wave 3 within wave 1. If I put the wave 1 here, similarly you can't even clearly say your wave 3 is extended, and you cannot even clearly say your wave 5 is extended. Like if you take a look here, in this one your wave 1 is bigger than your 3 and 5. And in this example, your wave 3 is the biggest wave, longest wave, right? And here in this case, wave 5 has the most extension. But in this case, you cannot clearly identify whether it's the wave 1 which extended, wave 3, or wave 5. That's the reason why it's called extension not identified. So it is still an extension, but it's not very clear which of the waves extended, but it is still 9 swings. And as far as you to have divergence at the end of the cycle, then it is a valid impulse sequence, right? Now, like I mentioned earlier, that now we need to understand the concept of the nest, because again, we will be talking about this as well when we move to the charts in a few minutes, right? So that's why it is important to understand what a nest is, right? So in Elliott wave, when you get a series of 1 2 1 2, remember after 1 2 normally comes wave 3, right? But as I mentioned earlier, that you can have any number of extensions within wave 3. So how do you get the extensions? That before you get the acceleration, you market does a series of 1 2 1 2. That means it's like the spring is coiling, right? So the market is getting ready for a big move in the direction of the trend, which could be to the upside or the downside. Okay, so when you get a series of 1 2 1 2 1 2, okay, that is called nesting, right? And then obviously that those 1 2s 1 2s, they are called extensions as well. And then the number of 1 2s you have at the start of an impulse, you need an equal number of 4 5s at the end of the impulse as well to complete the sequence and close the cycle, right? Otherwise you will have an incomplete sequence and a cycle which is not complete. So over here we can see it's a third wave extension of third wave. What do we mean by that, right? I'm just trying to understand, but the main concept I want to explain with this graphic is that of the nest, right? So in this case you can see here you got 1 2, and then instead of starting like saying this is your 3, okay, you initially would have thought this is your 3, right? Then you got a 4, and then you thought, okay, this is 5. But so yes, so you got 5 swings. The market can now start a bigger pullback. What the market does instead is makes a shallow pullback, rather short pullback to correct just this cycle from here, and then it makes a strong move to the upside, right? Which erases RSI divergence, which is this characteristics of a wave 3 of 3, that is going to erase the divergence with your wave ones, right? So then you say, okay, this was not 1 2 3 4 5, this was actually nesting. Market was getting ready for a stronger move in the direction of the trend. So then you go back and relabel 1 2 1 2 1 2, and then this becomes your middle part of wave 3. And this over here you can see third wave extension of third wave, right? In other words, that this is the wave, this wave 3 is the one which extended 1 2 3 4 5, and this wave 3 itself was wave 3 of 3 starting from here. So and over here you can see the market is nesting. This 1 2 1 2 1 2 is called nesting. Okay, and that will mean that eventually when wave 3 starts, it's going to be a strong move in that direction. And this is something again that we will be looking at as well in the charts when we move on, right? So I hope everybody understood the concepts regarding the Elliott wave cycles, the degrees, right? The different structures like an upward impulse, downward impulse, different types of extensions like the wave 1 extension, wave 3, wave 5, unidentified extension, and what is a nest in Elliott wave, right? So now with these basic concepts, of course, like I said, some of you would have already known these. In fact, perhaps even a lot of you, but even if there were some who didn't know, and so it was important to at least explain these concepts to them, just to give some basic knowledge before we moved on and looked at the charts, right? So now, basically what we're going to look at is, as I mentioned earlier, the grand super cycle sequence and the indices, the weekly highs that you have seen through some indices and stocks. We'll be looking at the two possible paths in the caterpillar with the same end result, all right? Like I mentioned at the start of the session, that there could be some detours along the way, but that, again, we believe that's not going to change the end result. Eventually, the future path that we believe is going to take place, that will remain unchanged according to our analysis and the data that we have available as of right now, and what the different clues that we're getting from markets, the different stocks, ETFs, etc., etc., right? We will also take a look at the indices path related to the US dollar index and how that, what that suggests about the current view of the indices, and then the long-term view as well, right? And then in the end, we're going to draw a conclusion about the future path. Okay, so now we're going to move on to the charts, right? So now comes the fun part. So I just wanted to go through these. So let's put this to the side. Okay, so now we want to look at, first of all, we will look at the FTSE chart here. This is the monthly chart of the FTSE index, right? And obviously we only have data going back to 1988, right? But if we go from the zero line, Now we can see over here, this is clearly a connector, right? The cycle ended. This becomes your connector here. We haven't erased this divergence yet. So then what do we have in the FTSE? Is that now that it has broken above this high, right? Now this decline looks impulsive. That makes me believe that this FTSE probably did like a running flat here, okay, or it maybe did like a B wave flat and did this. That's one possibility. Doesn't matter how you look at it. Like I said, we'll be concentrating on the bigger picture, and that is that you have, now remember what I said earlier, that this is an incomplete sequence, right? So it could be like an A, B, and now a 1, 2, 1, 2, right? Or it's 1, 2, 1, 2, 1, 2. Doesn't matter which one it is. It could be a nest, right? It could be like 1, 2, 1, 2, 1, 2. So that means the market is nesting to the upside, and it could be getting ready for a strong wave 3 to the upside. And that's why I said earlier that we need to understand the concept of nesting. But even if it is, let's say, not a nest, and let's say it's just a simple ABC, you still haven't reached the equality target yet, like the C equals A target, which is the 100% extension of this first leg projected higher from the secondary low, right? So this is clearly telling us that the FTSE sequence is bullish and FTSE needs more upside. Okay, now obviously from here I can count, if I, let's say if I use this as my connector, then I got 5 swings in the FTSE with divergence. So from here I have 1, 2, 3, 4, and 5, and that obviously one could say that FTSE can correct this entire cycle, right? At least there is a possibility. Okay, I mean that's not a preferred view, but then again, you go and look at this cycle here, all right, which looks like an 5 waves. So it would make more sense that it did like a flat here, and then it is nesting. Of course, the less aggressive view will be that it can correct this entire cycle, but then we don't think that that's the kind of pullback that we're going to see in the indices. It's not something that the market is supporting right now, and I'll explain why that is, right? So the FTSE sequence is bullish. That means the indices, the overall trend, it still remains bullish, right? We should not be thinking bearish, the indices. Even when pullbacks will happen along the way, nothing moves in a straight line. And it's not like, the indices are going up and they never see a pullback. There will be pullbacks along the way because people do take profits. Sometimes people might think that, the market is now going to roll over. And all those pullbacks, they do provide actually buying opportunities to join the trend, right? Which in this case, the right side is up. Okay, the sequence is bullish and incomplete. So any pullbacks in FTSE, they should be a buying opportunity, right? The FTSE, like I said, it has a bullish sequence. The FTSE is bullish against this low, right? Because like I said, if you go to the weekly time frame, so you'll see that this low comes with divergence here in the FTSE, and the reason why it could have done like some sort of an irregular structure here, right? Regardless, FTSE sequence is incomplete, and it is calling for more upside in the indices. So that's a given, right? The grand super cycle here is suggesting that it's not done yet, and the sequence is bullish, so we should be expecting more upside in the FTSE index. Okay, now we will take a look at this chart here, which is the caterpillar chart. Okay, before we discuss the two different paths, but first of all, I wanna show you the sequence, the grand super cycle sequence here. Okay, I'm not getting the RSI for some reason. Okay, but the cat here, if we take a look at it from this last low, okay, the caterpillar is clearly three swings. Now we can see it. If you go to the weekly chart, you can see it more clearly. Okay, I want to show you guys the RSI, but it's not for some reason giving me right now. So I will show you the structure from here. Okay, now the caterpillar here, the move from this low, it's clearly in three waves. This was the high that you saw back in 2021. Caterpillar did a clear three waves pullback, right, from there, and it rallied to new highs. Now, the rally from this low of September 2022 is so far in three waves. Okay, and now we know that in order for a structure to be an impulse, you need, you know, 5, 9, 13 swings and so on. But currently you got three waves from here. That means this is not a complete impulse, right? So in order for the cat to become an impulse, cat obviously needs more upside. Now again, you know, with the structure like this, you cannot be labeling, now it's giving me RSI. You cannot be labeling like a flat from here, right? Because obviously that's just like forcing the bias, and your wave B in this case, it's too big. Normally, you know, if it's around 1.236 extension, that's different. And you know, some flats do occur sometimes, but we never force them unless the market proves it. But even with that, the wave B needs to end around the 1.236 extension, right? So three waves means that it has resumed the rally by making new all-time highs, but the rally from this low is so far in three waves, 1, 2, and 3. That means it's not done yet, and it needs more upside. Now we'll talk about how it can see more upside in a couple of minutes, right? But you can see that it is calling for more upside because the structure from here is incomplete. The sequence is incomplete. You only have three swings, 1, 2, 3, which means that it should be extending higher, either like this and then do this, or it is nesting. So it's going to be one or the other, but should see more upside, right? And that's what we got in the caterpillar. Okay, then we have Nvidia, which is sitting at the equal legs within the grand super cycle from all-time lows, right? So if you take a look here, this one is pulling back from after reaching the equal legs from the all-time low. Now, this has significance as well, but we will discuss it later when we talk about the two possible paths in the caterpillar and which one is more likely to play out. And you know, that will help us basically draw our conclusion about the future path of the indices, the most likely path, and then like what possible detours can take place. So this one is pulling back from equal legs. Let's keep that in mind, right? But that doesn't mean that, you know, it's like now going to crash. Okay, but yes, a significant pullback can take place. It's something that we have to remember, right? This cannot be ruled out. Obviously, it could be nesting. You can go here and then just rally. That's a possibility. But with NVIDIA also, it is showing like 1, 2, and 3, and both structures are impulsive. You do not have any reason to label it like an ABC because this is not a bear market. Okay, so you need to keep looking higher, right? So it's either going to do this or it can follow this path and become a nest. So we will discuss the two paths in Caterpillar and then then again try to apply them to this NVIDIA chart as well. Okay, now we take a look at this chart here. Okay, so we mentioned that we will look at the weekly highs seen through some indices and stocks. Okay, so if we first of all, we already saw this new high, you know, the weekly high in the FTSE, which is creating an incomplete sequence. Okay, now we take a look at this chart of Caterpillar. Okay, and Cat, like I said, from here, it did like a 7 swings pullback and has already broken above this peak of May 2022, right? So the cat, it has made a new weekly high, as you can already see, and it's now bullish. Whether it's a nest or if it's 1, 2, 3, 4, 5, that remains to be seen, but we will again discuss that in a couple of minutes. So either it's going to follow this path, it's going to follow this path, but in both cases, the end result is the same, that it should see more upside. It's the only difference is that one is calling for a rather shallow pullback and the other one is calling for a bigger pullback, but both are bullish at the end of the day. Okay, but Caterpillar has broken the new highs above here, so it's a new weekly high, as you can see, right? And yeah, we talked about Nvidia. It made new highs, but it already reached the equal legs, right? We spoke about FTSE. Okay, AJ, the reason why we're looking at cat, it's uh, it's like one of the things we're looking at. It's not the only thing. So what we like to do is that we like to follow the clearest structure in the market and then look for reasons which either support that view or negate the view which that clearest structure is suggesting, right? And then of course we're using different like tools like Elliott Wave cycles, sequences, correlations, the distribution, and all that. Then we arrive at the conclusion, all right, and do our forecast. So I will explain now that why we are giving so much significance to this Caterpillar stock and what it means. But uh, let's talk about the Caterpillar now, the two paths here. Okay, so if obviously I can overlay any index here to this cat stock and you will see that it is following the same path. Okay, especially the tech ones in general, right? And the others as well, like talking about the overall view. Okay, so even though like not every company in a stock market has got something to do with cat, but cat is a stock, it's listed on a stock exchange, right? So it will kind of show the overall path of the index as well. I mean, sometimes stocks are leading, sometimes they could be lagging, but after all, they're all stocks and indices, right? For example, we can overlay this chart here. Let's try to overlay the NASDAQ, for example, or any of the other indices. They don't always move tick by tick, but you'll understand what I mean when you take a look at the general idea here. Now I'm going to do like a line one here. Okay, so here you can see the overall direction, right? Take a look here, right? When NASDAQ dropped here, CAT dropped as well. NASDAQ rallied, CAT rallied, right? NASDAQ dropped, Caterpillar dropped, correct? Then CAT rallied, NASDAQ rallied, CAT pulled back, NASDAQ pulled back, rallied, made a small pullback. Then they both rally together. So you can see that their overall direction is the same, okay? But in this case, why, for example, we cannot use the NASDAQ to tell us what the market should be doing and why we need to look at the CAT is because if you look at the NASDAQ, for example, it hasn't broken above this previous high yet, okay? So which means technically it has not created the next incomplete sequence yet. So until this high does not break, yes, there is a lot of separation here in this wave 3, and this is the path we prefer because of the separation here, okay? But the reality is that until this high does not break, if you were looking at NASDAQ in isolation, you would say that until this high does not break, NASDAQ still can do the double correction and go to this area. If you were looking at the NASDAQ alone, you could say that until this high does not break, after 3-7 can always happen. And so it can go to this area until this high does not break, right? But why we're not calling for that is because, like I said, so it's not the NASDAQ this time which is telling us that the correction should be done. It's something else which is providing the clues because the NASDAQ itself hasn't broken above this high yet, right? But in this case, it's a caterpillar stock, and I just showed you that they do like overall trade in the same direction, not tick by tick, obviously, because not in the same magnitude always. Sometimes they can play second dimension as well, right? Where one rallies and the other could stay sideways. But what will not happen is that one is like making a strong move to the upside, and the other one is getting a huge sell-off. So when one is rallying, other one could rally or stay sideways. And then when one is dropping, then the other one could drop or stay sideways, right? So, and that's how second dimension is created. So you can see that this is like, how they've been tracking each other nicely. And here in this case, with the cat now showing three swings up after reaching this equal X area. Do you follow me, AJ? Right? So we know that three swings, it's an incomplete structure, right? If you're dealing with an impulse, an impulse cannot be in three waves like we were looking at the beginning, that it needs to be a five-wave structure. And sitting at all-time highs, there is no reason to be calling the flat from here because obviously it doesn't make sense. So it's either a nest, 1, 2, 1, 2, it's a bullish nest and the market is going to accelerate to the upside, or it's going to be 1, 2, 3, 4, and 5 swings. All right, and then it can make a larger three-wave pullback and continue higher. Do you follow me? Everybody else as well? With three swings, yeah, because obviously cat is already sitting at new highs, right? So that means that, and then of course you got the FTSE as well. But with FTSE, it gives us the clue about the grand super cycle sequence that it is bullish. But in the near term, for example, if you go back to this FTSE chart, right? FTSE ended this cycle, or you could say it has ended the cycle. If it breaks to new highs, you can call an extension within wave 5. But you could say that FTSE might have ended the cycle, right? Now, of course, FTSE can break the high and do an extension in wave 5, then make three-wave pullback. And yes, FTSE has broken this high, and FTSE is telling us it's bullish against this low, that's for sure. But this low is 2020, right? So what we know through the FTSE sequence, AJ and everybody else, is that the indices, they are bullish against 2020 low, correct? Because of this break above this high here, and then what I showed you earlier, if I zoom out, that we broke this high as well and all that, right? The monthly chart is telling us that the indices, they're bullish against this 2020 low. Okay, now cat on the other hand is telling us that because of the three swings here and a break to new all-time highs in the caterpillar, this stock is bullish against the September 26, 2022 lows, right? Which of course could be in two ways, either a bullish nest 1, 2, 1, 2, an acceleration higher, or 1, 2, 3, 4, 5, three waves pull back to correct the 926 cycle and then continue higher. So FTSE was telling us that the indices are bullish against this low of September, whatever this is, 2020 lows. But on the other, now when we zoom in, the cat is now telling us that it has a bullish sequence and structure against the September 26, 2022 lows, right? And that's the reason why you would see that, for example, we're calling the NASDAQ completed here, even when it hasn't broken the high, because it wouldn't make sense if the cat is going to hold this low. Okay, that's wonderful. Thank you so much for that, and I'm glad you found it useful. That's a comment from AJ, and I hope it's helping others as well. Right. So you see, that's why we are already taking the bullish view in the NASDAQ, because in this case, it was the NASDAQ providing us with the clues, but we're still calling the correction completed, and we think the ideal path in the NASDAQ will be that it goes here, makes a new high, because this does look like an impulse, right? And then pulls back in 3 and then continues high. What could be the detour? That this becomes a flat, it drops here. Yes, those possibilities will always be there in Elliott Wave, right? So that's the reason why you cannot do the forecasting on the basis of Elliott Wave alone, because it's just going to give you numerous paths which will all be valid according to Elliott Wave. Okay, but that's the reason why we do not use just Elliott Wave to do our forecast. We look at the cycles, we look at the sequences, we look at the correlations, right? We look at the right side, and it's like a lot of things, that we look at to derive our forecast. So it's not just Elliott Wave, because if I was labeling with Elliott Wave alone, then I could say, for example, that until this high doesn't break, I do not need to change my view in the NASDAQ. It did three, like whatever, 3 or 5 here. This is doing, it's going to make one more high, complete a flat from this low, still break to this low, and then continue higher, right? But I should not be doing that, because the cat is telling me that it has already made a new high. Okay, it has an incomplete structure, which can play out in two possible ways, because like I said, you do not label the flat, because this is just too big of a B wave, and you never pick a flat against the obvious trend. Sometimes they do occur, right? But you would I would rather be we would rather be right, not forecasting the flat and trying to label with the trend and getting it right, let's say 9 out of 10 times. By doing that, I'm talking about the overall picture. Of course, there are short-term oscillations, and not every line we draw on the charts is going to play out. So, that's the disclaimer there. So, you might think that every line we draw, even on a 1 hour chart, will always play out perfectly. Of course, that's not the case. There are many different structures, right? So you can present one market might do might do something slightly different, but we're talking about the overall view, right? And then rather than picking the flat every time the market breaks to a new high, and then just getting it right 1 out of 10 times, and then getting it wrong the other 9 times, and the market keeps extending in the direction of the trend after breaking the high or the low. So that's why, it's never a wise idea to go against the obvious trend by picking a flat. So 3 waves, of course, yes, sometimes could mean that it could be wave B, but there is no reason whatsoever to believe that this will turn into a flat according to the data that we have right now, right? So that means it can play out in 2 ways. Either it's a bullish nest, 1, 2, 1, 2, and then it's going to accelerate after completing this, which, by the way, wave 2 could, of course, go here as well. Keep that in mind. Like, it's always 3, 7, or 11 swings. Or it's going to make 4 and a 5, and then make a larger 3 wave pullback to correct this cycle, and then continue higher again. Sorry about that. My apologies. Okay, so this is something that we will try to conclude now and figure out, right? Like, which of these two paths are more likely to play out, and what do we have in support of this path, and what do we have against this path, and then what do we have in support of this path, and what do we have against this path, right? And regarding the time frame, AJ, okay, time frame for what exactly are you referring to, right? Like, the time frame, I mean, for this path to play out, or the time frame for it to complete 5 waves up and then do 3 wave pullback. I'm not sure if I understood the question, so can you please elaborate on that? Okay, you mean like going with the view in the cat that eventually it will break higher? So you mean, by when could the Nasdaq break this to above these highs here? That's what you mean? That it, by what, like, what time scale are we looking at? Okay, so to be honest, it depends on if which path plays out in Caterpillar, right? If this path plays out, it will take a while. I do not know about the exact time frame. Forecasting time is the hardest part of forecasting, right? So we have many different tools to forecast the structure, the price, using extensions, the quality targets, the different structures, etc., etc., right? But obviously, with the time, it's not as straightforward. So, with the time, it's always more complicated. Yes, there are some tools through which you could forecast the time, but it's not always as reliable as the price forecast, and the forecast of the different structures, right? So, having said that, like I said, I do not have the exact time frame, but if this path plays out in the cat, okay, then Nasdaq will make a new high, make a 3 wave pullback, and then go on to break the highs. It's going to take some time. But if this path ends up playing out, that the caterpillar becomes a nest, that this is a 1 2 1 2, and then it breaks, accelerates to the upside, right? Then obviously Nasdaq can do that quickly. For example, NASDAQ could then have ended the cycle already. It could go here and already start the next leg to the upside, even though I believe that it looks better that we are still in wave 4. And again, I will explain why when we get there. That's what we'll be discussing next. So it would really depend on which path exactly plays out in Caterpillar right now, and that can determine how long it would take for the Nasdaq to break to new all-time highs. Okay, so depending on if it's this path, it could take some time, and if it's this path, then it could happen rather quickly, right? Not a problem. You're most welcome. Now, getting back to this chart, so this fact is now well established that we got three waves here in the Caterpillar to new all-time highs. It's an incomplete sequence and structure, and the end result should be more upside. So that should be given. Okay, and now how it's going to happen, whether it's going to do this 4-5 and then correct this September cycle, September 2022 cycle and higher, or if it's going to do a nest where it ends wave 2 here and accelerates to the upside, or do 7 swings in wave 2 and then accelerate to the upside, right? And that's what we will try to figure out now and determine, right? Same goes with the ES, right? ES hasn't broken to new highs yet, but you can see that we're still calling it completed. Of course, like with the same example as the NASDAQ, one could say it can go here, do this, okay? That I could again say that this is a flat and it can still do this if it wasn't for other clues in the market, if I was looking at this in isolation, right? Even though this is still not impossible, but like I said, looking at the rest of the market, and I will show you some other instruments like the BAC and all that, and as the reason why we are not going with this path. Okay, this can still happen even if Caterpillar follows this path number, this path in which we will make a new high and then do larger three-way pullback. Okay, but again, we try to take the more aggressive view with the trend. So yes, until the high doesn't break, it can still happen, but we take the more aggressive view because the retracement is too deep now. And the retracement is so deep, it doesn't make sense to be calling the double correction, right? And then with some instruments having already broken to new all-time highs. Okay. Now, I dig deeper here into and explain the two different paths in the Caterpillar, right? I got a question here that when you say incomplete sequence, can you please elaborate a bit if possible? Okay, so an incomplete sequence, remember I told you earlier at the start when we were looking at different structures that an impulse sequence, right? It runs in 5, 9, 13, 17, 21, 25, and so on, right? So this is the impulse sequence. Or you can call it the motive sequence as well. Either one, it's the same thing. And then you have a corrective sequence which runs in 3, 7, 11, 15, 19, 23, and so on, right? So now we know that the Caterpillar rally here is impulsive, and now it breaks to new highs, and the break to new high so far is in 3 waves, right? Which has not reached the equal legs neither, even if it was just an ABC. That was at 313. So now for an impulse sequence, we know that we need, like one of these numbers, 5, 9, 13, 17, 21, 25, and so on. Okay, hello Kenny. We will not be talking about each individual stock here because that's not, the purpose of this webinar. I mean, we do cover that in our Group 3 live session on a daily basis. All right, where we both Tesla and Apple are covered there, right? Because there are like too many stocks to possibly cover in a webinar like this. That's why it's a broader view, and we are talking about Caterpillar here, as explained earlier, because it is one of the clearest structures right now, and it's providing us with the clues, right? So that's the reason why we're discussing this so much. Because if we start talking about individual stocks, then this webinar probably would just go on for days, right? Because there are just simply too many stocks to be talking about individually. That's why it's the broader picture we're talking about. but we do cover Apple and Tesla in our Group 3 live session on a daily basis from Monday to Friday. And of course, we do update their charts as well, the short-term charts, the mid-term charts, the long-term charts. Everything is there at the website. And of course, there's a chat room as well to ask questions. Thank you, Gary. I appreciate the feedback. Thank you very much. I'm glad you're enjoying it. Right, Kenny? So please do keep that in mind, because the thing is, if I entertain questions about some particular stocks from someone, then there are like hundreds of attendees here. Everybody might want to ask about their stocks. And of course, this session cannot be extended so much that we start covering every single stock, and I cannot be doing any favoritism or being unfair to anyone. So I hope you do understand that. So we need to stick with what we need to stay within the scope of the webinar and only talk about those things. And any questions? Yeah, like I said, uh, you know, then somebody could ask me regarding the correlation with NASDAQ about some other stock. I hope you understand my point. So there are like 500 stocks in S&P, just to give an example. Lots of them in the NASDAQ. That's why we cannot talk about every individual stock, if you know what I mean, right? So it's the broader analysis and the view that we are covering here, because otherwise it just would take too much time. And then if I take this question now, which is not directly related to what we're discussing, then I it would be unfair if then I don't take questions from others which won't be directly related to what we're discussing. I hope you do understand that. All right. So and again, if you're not a member, we do offer a 14-day trial, so you can avail that to always check our view about the Tesla, Apple, and lots of other stocks and ETFs that we cover within Group 3. All right. So as I was saying, we were talking about the impulsive sequence and the corrective sequence, right? So when we say that this is three swings, right, and it's not part of it is part of a corrective sequence, right? But we know that this move here, we're looking at impulsive move here. So this should not be this cycle here should not end in three swings, because that is a corrective sequence, right? So for example, I will tell you that this pullback, it should end in either 3, 7, or 11 swings, for example. Why? Because this is a correction, right, which could end in either 3 swings, 7 swings, or 11 swings. And you will find all those numbers here, 3, 7, and 11, because all these, they are part of the corrective sequence, right? So you can end 3 swings here, or you could do bounce, fail, do 7 swings, bounce, fail, do 11 swings. So this correction should be in either 3 swings, 7 swings, or 11 swings, and so on. But as expecting this move to be an impulse, as the previous move, it was an impulse, right? So 3 swings means it's an incomplete sequence, right? So you need either 5, 9, 13 to complete the sequence. So that means it needs 3 swings means it's either a nest, like a 1, 2, 1, 2, or it is 1, 2, 3, 4, 5 to complete this impulse sequence, then a three-way pullback and higher again. All right, is that clear, AJ, and to everybody else? This concept, I think it was AJ who asked the question, if I'm not mistaken. No, the what incomplete means is that the trend is still in progress. Yes, exactly. That's what it means, that the sequence will continue because it is not complete. That's what incomplete means, right? That something which is not complete yet. So that means it should continue so it can complete. All right, so you're most welcome. Now, talking about which path is more likely to play out here in the caterpillar. Okay, so there are two possible paths, like I said. Either it's going to be a nest, or it's going to be 1, 2, 3, 4, and 5. Okay, so I've listed both the scenarios here. This is the scenario in which caterpillar is doing 5 waves up from this low of 926 2022 before it makes the larger 3-wave pullback to correct this 926 2022 low cycle and then continue higher again, right? So if this path plays out, then indices will extend higher in the form of 4-5 to end the same cycle, right? For example, NASDAQ doing like a 4 and 5 and then pulling back, just as an example here, this view, right? In ES, for example, doing that, making a new high and then pulling back. That will be the path in which Caterpillar is doing 5 waves, right? And then obviously some of them, they might have already ended the same cycle that we're discussing from September or October 2022. What they will do is that they will do 3 waves back, and when Caterpillar and some of the indices, they go on to make a new high in wave 5, then the ones which already ended the same cycle, they will then retest the highs or bounce and fail below the highs and then do the double correction lower, right? So for example, like some, let's say we might have already ended the cycle. Just as an example, let's say ES ended the cycle here. I'm not saying that's the case, but hypothetically speaking, let's say it was any index. Just to explain what that means, it will do 3 wave back. Then when some indices and CAT, they make a new high in wave 5, then they will bounce, fail below the previous peak, and then turn lower into a double correction to the downside. All right. So they will then do either this, some of the indices. I'm not talking about ES. This is just a general example, like what the indices could do. Just talk about the general path, or they make a new high and do this. For this, that's the consequence for this path in the Caterpillar, right? So as it says here, the indices will extend high in the form of 4-5 to end the cycle, or some already ended the cycle and will retest the highs for a double correction lower. Okay. So hello Khalid, how are you doing, my friend? Yeah. So far we have talked about FTSE, we have talked about, we've given you the NASDAQ, ES, and we have covered the Caterpillar, and we talked about Nvidia, and we will be covering and talking about a couple of other instruments. Like I said, uh, we are trying to, derive the forecast and get to the conclusion about the future path of the world indices. We will not be necessarily covering each and every one of them, right? So I said already before, that this is the one which is providing us with the clues, and while explaining this, I will be showing more instruments as well. So again, this is how we always do it. We focus on the clearest structure. We do not just go tick 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 and just give the forecast about each instrument without explaining or giving any reasoning, any logic behind that, and just like throwing the charts out there, uh, like a money gun, like or like a machine gun shooting bullets. So we don't do that. We take our time to explain our concepts. So that's exactly what we're trying to do here. This is how we always do the things. And since this is the one which is providing the clues, that's the reason why we're focusing so much on it. And now, while we are going to explain these two parts, we will be looking at other instruments as well, right? So that's the format, and I'm pretty sure that most of you are enjoying it. But if it's doesn't work for some of you, I'm afraid not much I can do about that, because that's how we like to explain. All right. So moving on. This, as I said, that what are the positive points, or what exactly is supporting this view in the Caterpillar, right? Uh, Okay, the plus points here is, in the next step, we will be, remember I said earlier, we will be talking about the indices path related to the US dollar index as well. Okay, so this is the dollar index path. Okay, which, by the way, if we remove this and let's go to the monthly chart here. Okay, and you will see that from here we have 1, 2, 3, 4, like a 1, 2, 3, and then like a possible 4 and a 5, right? So this is what the US dollar path is suggesting that it will be. It is in need of one more high to complete the sequence from here. 1, 2, right? Then you got another 5 waves here, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, right? So with this, with the dollar, ideal scenario is that when the caterpillar makes this new high, the dollar makes one more push lower here to do 3 waves pull back from this peak, and then the dollar can go and make this new high, and that can produce this larger 3 wave pullback in the caterpillar stock, right? Now, on the other hand, there is a possibility that the dollar already ended the cycle and it does not make a new high, right? So in that case, what will happen is that obviously, if this is your wave 5, again, wave 5 cannot be in 3 waves, then you could have an irregular within the wave 4, like a B wave flat, and then the wave 4 ends here, which is below this low, and your cycle ends over here, right? Then you got 1, 2, 3, 4, and 5. So in that case, the dollar obviously can go here and it can start wave 3 or C to the downside, or it could start wave 3 of A as well. So uh, what is supporting this view? The plus points are that the dollar weekly cycle, if you count the number of swings from here, it still needs one more high unless you say that your wave 4 was an irregular and ended here. If that's not the case, it still needs one more high. That can support this path in the caterpillar, that when the cat makes the bigger pullback, that could be this wave 5 up in the US dollar index. Okay. What is the other plus point here? That the yen pairs cycle is similar to this view and it's favoring this path over here. Okay. Now let's take a look at this. This is Swiss yen, right? So Swiss yen here, we can see that it is showing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 swings, right? That is an incomplete sequence. Remember the sequence that we were talking about earlier? Impulsive sequences 5, 9, 13, 17, 21, 25, and so on. And as we counted the number of swings here in Swiss yen, we got to, you can count them here, right? 3, 4, 5, 6, 7, 8, 9, 10, and 11 swings here, right? So that means if you take a look here, this obviously there's a low, plenty of separation here between this high and this low. There is obviously no overlap there, right? We got it here between this 1 and 4. So this clearly has the look of an impulse wave, right? You can see like, there's a channel here for wave 3 and so on, which was broken here. So with this, it is, it clearly is an impulse here. It is impulsive looking, but it is only showing 11 swings right now. So that means it still needs one more high to complete the sequence, right? To get to 13, because so far it's 11 and 11 is a corrective sequence. So in order to make it 13, you need one more high, right? So what we need in the Swiss yen is one more high to complete 13 swings. And with the cat, you could say that it could do 5 waves and then do larger 3 and higher, or it could be a nest 1 2 1 2 and higher. But it is difficult to make the case of a nest in the Swiss yen, right? Because I really don't see one right now. For example, if I say that this is my 1 and 2, for example, and then I ended another 1 over here, and this is my 2, and we are also nesting in the Swiss yen. Like, from here, if I count, I got 1, 2, 3, 4, 5, 6, 7, 8, 9. And 9 is impulsive sequence, right? So I can say that if for example, I want to make a nest, I can say this is my 1, 2, 1, 2. Now look at the size of the wave 1 of 3. It's almost at the 261 extension of the 1 and 2. So that's usually the extension you would see in a wave 3, not in wave 1 of 3, right? So this doesn't really have the look of a nest. and it clearly looks like it's in need of one more high, and then it should end this cycle, resulting in a larger three-way pullback. And what would that support? That would support this path in the caterpillar, right? That's why it says yen pairs. Then we have Nvidia. Okay, now Nvidia, it looks like it's in wave 4, and it's within wave 4 from here, so it should make one more high after doing this. To end the cycle, make one more high to end the cycle, and then since it is sitting at the equal legs from all-time lows, from the zero line, if you can put it like that, it would be hard to see just pushing through, keep extending higher without correcting the cycle. So it looks like we're still within wave 4 in this cycle. So with the new high, it clearly looks like it can end this cycle. It doesn't have, like, of course it can be an S. Sometimes it does occur with the shallow wave 2, but it looks more like we're still within wave 4 from here, and then it should end the cycle from October lows with a new high, or might have ended here already, and then that can support this path in the caterpillar as well, right? Then we have BAC. Okay, somebody like a few minutes ago was saying that why just focusing on one instrument. Again, I think we have already covered like 7 or 8 different instruments already within the webinar. So sometimes I really do not understand some of the comments. Right, so this is BAC, and let me show you the descriptor. Okay, so this is the Bank of America Corporation. Now somebody could say that what does this one have to do with what we are discussing, right? So this is like, it's got nothing to do with they do not make heavy machineries. It's not related to CAT. So why are we talking about this? A banking stock. Again, I told you guys earlier that we focus on the clearest structures and try to make sense of the overall market, and then come up with the path which makes sense overall, right? So now what makes sense overall is we can see 5 swings lower in Bank of America from this peak, right? So by 5 swings, I mean it's an incomplete sequence, because this looks, this could go either way. It can go 1, 2, 3, 4, 5. That's an incomplete sequence. I'll put the RSI here, and with this one, probably borderline here, might have been erased already, but it doesn't look very impulsive at all. You can see that the rally from this low was clearly in 3 waves. It failed, and it is about to make new lows again, right? And that's going to make it 5 swings from this peak. So Bank of America is telling us that it's not done yet, okay? And if this is your connector, it will either go to this area around 2040, or it will go to the bigger equal legs, which is around 1773 area, right? So if this one is gonna get to this area and at least a 2040, which is equal legs from here, remember Bank of America, it can play out in 2 ways. It could be 1, 2, 3, 4, 5, make a bigger bounce in B and then drop, or it could be ABCWX, ABCY, which again may or may not reach equal legs, something to be kept in mind, or might just reach equal legs from here, right? Now, but it is telling us that it needs more downside. So for example, if the caterpillar is nesting, okay, and it reaches this equal legs over here from this peak, cat reaches equal legs, right? You go 1, 2, 3, 4, 5, 6, 7. It reaches equal legs, and let's say it's a wave 2. Uh, it just needs a little bit more downside to reach this equal legs, not that much more downside. On the other hand, Bank of America still needs to drop a lot more to reach even the equal legs from here, right? So that's why this sequence in Bank of America is not really supporting this path in the caterpillar according to the data that we have today, right? So what this chart is supporting, this chart is supporting the view that the caterpillar makes a new high, and then it makes a larger three-wave pullback in wave 2 to correct this cycle, and then we continue higher, all right? And during this pullback, the Bank of America can reach equal legs here or here, and then this one will be at the extreme from here. This one should rally, and caterpillar should rally. That should be the wave 2 pullback in the Swiss yen as well, like the yen crosses, right? That can be the wave 2 pullback in the ES, the NASDAQ, the other indices. Some might still do the double correction lower, like Bank of America is calling, right? But Again, like I said, we're talking about the overall view, the path and the end result, which is still bullish the indices, right? Keep that in mind. Okay, so this chart is suggesting that, like I said, like Nvidia, Bank of America, yen pair, the dollar weekly cycle is supporting this path here. Now, what is the negative point here for this view? What's going against this view is that some instruments are running out of space to the downside. Okay, what does that mean? That means that if CAT makes this bigger pullback, Bank of America goes to equal legs or at least equal legs from here. Others, obviously, the stocks should be sideways to lower. I told you earlier that unless it's an isolated move, like due to like a news event or something and short-lived one, generally if one is dropping, others would be sideways or lower, right? They won't be going completely in the opposite directions. So if you take a look here at JetBlue, for example, some airline stocks. Okay, we can see this one is clearly calling more downside from here. We've got 1, 2, 3, 4, and then it is trending lower. This is 3 connector, and now it has broken this low. It is equal legs from here, comes at 149. Obviously, we're not even talking about the equal legs from here because that will take you in the negative territory. That's exactly what we mean by some symbols running out of space to the downside. That bigger equal legs will take you to minus 1.31. Right? That's JetBlue. So similarly, if you take a look at the American Airlines, okay, this one, if this low breaks, clearly this is your connector here, right? This RSI trend line break and the price trend line break clearly suggests if we break the low, this is your connector. Now just imagine where it goes if you break that low. Obviously, the next equal legs would be at minus 24, right? I mean, it doesn't have to go there. Even the 0.618 extension will be at minus 5.10. So of course, yes, it can make just a marginal new low. It can truncate. Yes, that does happen. But the negative points for this view are that some instruments are running out of space to the downside. But again, that does not mean that this will not happen because currently we got more things going for this view than going against this view. So I'm still favoring this path right now. Even within, like, the broader picture, of course, is still bullish. But even within that, we are favoring this path right now rather than this one here. Because like I said, you look at the Bank of America, you look at the Swiss yen sequence, right? The dollar weekly cycle, and so on. Nvidia being at equal legs, supporting the idea of the bigger pullback still to happen. But all these things are supporting this path, which means we are in the first degree, we are bullish against the indices, against September or October lows, and we believe any pullbacks against those lows are a buying opportunity, right? In majority of them, some of course have already broken those lows, then like the BSE, for example, then they should be a buying opportunity at their next equal legs area, which would be this one over here in the case of the BSE. All right, guys. So then again, for this view, again, the positive points are that some instruments are running out of space to the downside, like I showed you. For example, you got Carnival, JetBlue, American Airlines, and the ones going against this view are whatever is the positive points for this view are the negative points for this view, right? So you know having like explained all this, the conclusion that we can draw is that the indices, they remain bullish against the September or October 2022 lows. All right, and we expect the rally to resume by holding those lows, and the detour is that we could be in an even more aggressive scenario and do the bullish nest, right? And some indices might still do the double correction. They could still break September or October lows, but will still be another buying opportunity because of the path that the caterpillar is showing us, right? So that's our conclusion about the future path, that we remain bullish. All right, in the first degree against September or October 2022 lows, and the worst case, if a yen dynamic plays out, which would be that the indices will make a huge bigger selling. In that case, of course, remember the FTSE is telling us that we are still bullish against the 2020 lows. So the overall future path is bullish, first degree against September or October 2022 lows. And in the near term, you got the two paths in the CAD as well, in which we are favoring the path in which it makes a new high excuse me, and then pulls back to correct September or October 2022 cycle before turning higher again. All right. So with this, we have come to the end of the session. If Thank you so much for your kind words, AJ. I really appreciate the comments. It means a lot. Thank you very much. And I'm glad you enjoyed the session and participated and asked some, interesting questions there. So these are the markets that we cover. And thank you so much for, being with me for the last hour and 20 minutes. Thank you very much, David. Thank you, Dirk. You're always welcome. Thank you, Michael. Appreciate that. And thank you everyone who joined me, or who joined me and couldn't be with me till the end. Again, you guys can watch the recording as well. And you're welcome, Cedric. Thank you for attending. So these are the markets that we cover. Of course, a lot of you know already. We cover 78 markets in total. Thank you very much, Envy. Thanks for attending. So we cover a lot of forex pairs, indices. Thank you, Kenny. Appreciate that. You're welcome. We cover a lot of indices from around the world. A lot of U.S. indices, Asian indices. We got Nikkei, FTSE, European ones. We cover a lot of commodities, stocks, ETFs, and some cryptocurrencies. So it's 78 world markets in total that we cover, and we divide them in three groups. So if you enjoyed the session and if you like the way we look at the markets, and we do the live sessions daily where we explain what we did today. And of course, we are talking about these kind of correlation sequences, the scenarios on a daily basis in our live sessions, and to explain our forecasts, the right side, the blue box, the extreme areas, which helps you enter at high probability areas or the high frequency areas in the market, and from where you get at least three-wave reaction or can start the next leg up. So you guys are always welcome. If you've never tried this before, you're always welcome to start the 14-day trial. You can simply need to go to our homepage, which is this one here, and you just click on this button, and then you can start the trial. Or if you've been a member in the past, taken the trial, you can just take one of the paid plans as well if you would like to get back. All right. So if there are no further questions, then thank you so much everyone for joining me. I hope you guys enjoyed the session. We will process the recording, and like I said, it will be put up at the website latest by Monday, and we will email it as well to all those who attended the session today. Thank you very much, everyone. Take care of yourself and have a wonderful weekend.